Hi everyone, it's Vinay with My Mortgage Professor. Hope you're doing well. Today we're talking about life insurance. So in addition to being a mortgage broker, I'm also an Alberta Life License broker. And I wanted to talk to you about something I'm very passionate about, which is life insurance, critical illness, and disability. Some tough questions that you need to ask yourselves is, what's come up that's made you think about life insurance? So have you maybe just started a family? Are you looking at potentially retiring and looking at estate planning? If something were to happen to you, what would that mean financially? Would you be able to survive, or would you have to deplete your assets? Who would pay for living expenses if you were to ever become disabled? And what do you believe your life expectancy will be? For the average male in Canada, it's 80. For the average female, it's 84. And how important is peace of mind to you? For me personally, it's really, really important. I knew when I started a family, having some additional life insurance was a critical part of our financial planning. So in this slide, I'm going to talk to you about having your own individual life insurance versus a bank-owned insurance policy, which many of us have in place. Some key differences is that you own and control the policy, whereas the bank owns and controls the policy if you got it attached to your mortgage. The premiums are guaranteed when you own your own policy, and more importantly, the coverage stays the same. So if you have a $500,000 mortgage, your coverage stays exactly the same at $500,000, whereas if you took the policy with the bank, that coverage will actually decrease over time. The main thing is that you do not want to have the bank as the beneficiary. You want to be able to choose your beneficiary and have that go to them tax-free. Also, your policy stays with you. If you ever change homes, oftentimes the policy is not portable with the bank. What's really, really important is that 30% of all bank-owned policies get denied, which you never want. So it's very important for the same amount of money to have your own policy in place. Now we're going to talk about employer's coverage. A lot of people make the mistake of thinking that they have life insurance through their employer, which is typically only 1 or 2 times your salary. However, if you were to ever leave that job or start your own business, that policy ceases completely. So as I mentioned, it only covers maybe 1.5 times salary through your group plan. It ceases right as your employment ends. If the employer pays the premium, the death benefit is actually a taxable benefit. So if you get $100,000 in the event of a death, the after-tax that goes to your beneficiary is only $70,000. The main thing is that it nearly doesn't cover enough. So the mortgage replacing your income is typically $500,000 to $1 million for the average client. Having 1 times your salary just won't be enough coverage for you. Also, there's generally no critical illness coverage in place. So if you were to ever get diagnosed with heart attack, cancer, stroke, none of that would be covered by most employers' plans. So there are 2 main types of life insurance. One is term insurance, the other is permanent insurance. I'll quickly go through the differences. Permanent is similar to owning a home. It builds equity through cash value over time. It's more expensive. It does provide you with peace of mind. And if you own a corporation, it can actually be placed inside of the corporation, paid with corporate dollars. Then you have term insurance, which is similar to renting a home. It has no cash value. It's cheaper and it provides peace of mind. However, your premiums do not build any cash over time, and they can go to waste if there's no claim. So ask yourself, do you want to be a renter or owner? For most of my clients, it's actually a combination of term and permanent insurance. So next we're going to talk about critical illness, which most group plans do not have through their employer. This would cover things like heart attack, cancer, stroke, coronary bypass. You can have up to 25 critical illnesses, everything from Alzheimer's to Parkinson's disease. I'll quickly go over what this means. So what are the top 2 causes of death in Canada? It's heart attack and cancer. You likely know someone that's been affected by these critical illnesses. In Canada, breast cancer affects 1 in every 8 women. For prostate cancer, it's 1 in every 7 men. For heart disease, it's 1 in every 4. And for stroke, it's 1 in every 20. Now, these are more what we call living benefits. So for illnesses that are life-threatening, such as these, and you survive for 30 days, your policy pays out a tax-free lump sum benefit equal to typically 1 times your salary. So I've used in this example $100,000. This could help you with medical costs. You can use the money for any purpose and it comes to you tax-free. There's also a return of premium option, which is what I have for myself. So that means it's kind of like a forced retirement savings plan where every month it goes towards the policy, but if there's no claim, every 15 years I get my 100% of my premiums back, or you can set it up to age 65 and have 100% of your premiums come back. So again, it's like forced retirement with having peace of mind, knowing that you're covered. Now we'll quickly talk about disability insurance. If you're self-employed and you don't have a group plan, having some disability insurance is really, really critical for you. Let's have a look at what that means. So disability insurance is way more common than you think. 1 in every 3 people will have a disability through their working years before they turn 65. If you're self-employed or you work in a higher risk job, disability insurance is really critical. We typically set up policies to cover you up until you're 65 for your working years. Now we want to make sure you're not overinsured, so I'll always check with your employer's group policy. Generally they'll cap it at 66% of your gross income for a disability benefit, so we'll always be able to map out best options for you. So if you have any questions about best life insurance options, feel free to reach out at 403-690-7376, or you can reach me by email, vinay@mymortgageprofessor.ca. Thanks for watching. Okay, now let me